debrief, I call it, where I'll come in and sit in here at the end of my day. Normally I'll do my journaling. To be fair, I haven't done my journaling yet, so naughty me. And I will review the current day, very similar to end of day markup, but I will spend some time just trying to understand the price action and try and find some reason behind it. The market tool that I'm using is really good for that. It can help you understand why certain moves happen in the marketplace. I'll be honest, this move we had yesterday wasn't really explained by market. I've had to do my own research on it. When we look at the overall, you can see that it's still very much bullish on EU. So just to flip it for dollar, right? So we can still see very much that we've got a bullish dollar, or bearish dollar, sorry. Now, I know a lot of us, and this is the problem when you're too zoomed in to the lower time frame. I know a lot of us would be looking at this and being like, oh, nothing's working and the market's going against us. But actually, the market did exactly what it should have done and exactly what it normally would do. And again, I'll explain to you why. And if anyone's had a couple of tougher days, the reason why you've had a couple of tougher days is perfectly logical. But this is where the professional traders and the traders who are going to last are set apart from the gamblers. It's very easy to get what I call one win syndrome, which is where you might have a good week, a good day, a good trade, and it gives you what I call like the Mario star, right? You used to get the star in Mario, and you'd like go really fast and you couldn't get killed. That's what happens when you have a good week, good day, good trade. You feel invincible. The market is sent to test you. There are so many moving parts, which is why typically completely mechanical strategies often don't work. Now, we've simplified price action trading as much as possible, but you can't get it any more simple than this and replicate our win rate and profitability and that sort of stuff. Now, the point I'm getting at is that unless you do something stupid like me and you take 3 entries on USD Swiss, oh, have I cleared my charts? No, they're here. You take 3 entries on USD Swiss on Thursday. That last one should not have been taken. This one, I'm absolutely happy with that trade. I didn't get profit out. I should have got profit out. We're going to come back and speak about this. I'm going to do the end of week markup slightly differently. I'm going to do a bit of a trade review for you guys. I'm going to talk you through my trades. This one was a gamble. I'll hold my hands up to that. I was like, right, we've tagged the trap. We've rejected the trap. Let's go and let's blow the trap. We didn't blow the trap. Simple as that. This third one was just mental. I'm completely okay with the fact that it was mental. It was a risk entry in bullish market structure. It's just everything about this trade is wrong. So it's really important to give you a debrief, to debrief yourself on this. Now, where I suppose the learning comes in is in the trades that you should have taken. But if you look at these positions for me, that puts me 3% down. Now that is shit. All right, 3% down. A lot of people wouldn't be comfortable with that. For me, however, I'm cool with that because I know my edge will play out. It doesn't take me anywhere near any kind of drawdown levels. It puts me done for the day. My smaller drawdown accounts would have only been half that risk. So some of the other, I have my account, I'm always trading 2 accounts at any one time. So 2 groups of accounts at any one time. I then aim to hit a profit target somewhere around 3-4% on that, which gets me to a payout region. And then I stop and I move on to my next group of accounts. That's kind of how I manage my prop capital. So that puts me in, on a small drawdown account, puts me at 1.5% down. But remember, we had this fantastic 3-to-1 trade here, which ended up making me about 4% on my higher risk accounts and about 2% on my other risk accounts. So that's fine. And then I was also in this gold position, which made me 4% on half of the accounts and 2% on the accounts. So I ended up last week in profit. And this is where risk management, and I came out of this trade here, this is where risk management will massively help you. Because if you had a bad week yesterday, so let's say you took the exact same trades as me, so you took the sell on Wednesday, and then 1, 2, 3 losses on Thursday, and then a 4th loss on EU on Friday, you'd be at break even for the week, but with your gold, you'd be in some quite nice profit. And that's kind of where I ended up. About 4% on half of my accounts and 2% on my other half of accounts. this is where risk management really comes to help you, because even though I made some mistakes here, I'd probably say that I could have cut out 2 of those trades. Because I was still risking the same amount, I wasn't over leveraging, I wasn't then, once I had that 3rd one, I was like, right, fuck this shit, I'm done for the day. I'm not going to take any more trades. It puts you in a position of power against the markets, because you can now say to yourself, well, look, I've lost a couple of trades. I'm still up or break even for the week. Tomorrow's a new day. Let's come back bigger and better tomorrow. Anybody who's ended up losing, you'd probably agree, or you'd probably confirm that you've probably maybe taken too many trades. You've probably over leveraged. Is anyone guilty this week of taking a loss and then increasing risk on the next trade? Has anyone done that this week? That's good. That's a really common habit for traders. So as long as your risk management is there, even if you've taken a few losses, it's really not the end of the world. You're going to come back from this, you're going to be fine. Now, let's go back over and just have a look at the dollar. So what I love about this market tool is it tells me what's impacting the move. So if I look at this candle here, which is the 4 p.m. candle, that's the biggest bearish hourly candle we had this week. All right, is it going to load? Give me a mate. Let's just give it a moment. I haven't used it at the weekend, so maybe, I don't know, analysis will be here when it's complete. It normally gives us a little bit of, let me just refresh it quickly. It normally tells us why. Strange. Anyway, let's do it the raw way. So basically, when I was looking at that on Friday, we'll keep an eye on this and see if it comes back with any data. But where we did the analysis on this candle, what ultimately happened was it said there's no key driving macroeconomic data that's caused this move. So this is basically just a positioning move. I think I posted it. So look. Cool. This was the day before, because we had a bullish move the day before, didn't we? So gradual USD recovery and a low volatility, technically driven intraday grind higher. Move size is small and steady, consistent with normal intraday mean reversion flow. So just like a pullback, basically. No direct USD headline or Swiss data in the window, because this was on USD Swiss. Broader dollar weakness versus majors suggests cross-driven CHF softness rather than a USD surge. So that explained, I don't know if anybody noticed this last week. Did anyone notice how Swiss was quite out of sync with dollar? Did anyone notice that? And that's quite unusual, right? So you can see how dollar's really struggling to make any new highs. It has done it, to be fair, on the really low time frames. This, for me, isn't actually a true break. It's another first break, because there's been no real significant closure there. So I'm still not classing this as a bullish market. If I go up to the 30-minute, that's one of those weak first break, false breaks we spoke about earlier in the week. Because it's broken above, then immediately closed back below, I don't see that as a momentum shift. This, to me, very clearly looks like a complex pullback. Just these weak first break on top of first break. And I think we're just going to grab some sort of higher pricing to then go short the rest of the week. That's what I think. I'm not expecting that. That's what I think will happen. I'm not going to trade off the back of that. I'm going to allow it to happen. And if it happens, then I'll trade it accordingly. Equally, if we keep climbing and climbing, would I consider buys from here? Well, maybe, but I have to appreciate that the fundamentals are very bearish on the dollar still, ultimately. So the reason, and this is, again, coming back to the analysis here, broader dollar weakness versus majors suggests cross-driven CHF softness rather than USD surge. So indicating that we've got a Swiss currency impacting this price action more than the dollar impacting. Because the dollar, I think if the dollar was really strong, right, then this would be surging right now. The reason why it's climbing and the dollar isn't really moving all that far is very simply because there's something going on in Switzerland. I'm not sure what it is, if I'm honest, to be fair. I can tell you, we did have some news for Swiss on, it was Tuesday. Retail sales were very good. So we had good retail sales numbers, but not sure. Technically, that would make the chart go down if you think about it, because if Swiss franc is increasing in value, then it means that that's the other, do you see what I mean? Because it's the second pair, it's the other side of it, it's the other way around. So anyway, looking at this price action, something else was going on other than the dollar. And I think it was just literally supported by the dollar not really moving. Where this can really help you is we can understand from this that USD CHF drifted higher in a tight range as traders faded earlier CHF strength. with slow buy-side interest off intraday support and no fresh macro catalyst, reflecting position tweaking and technical rebalancing rather than news-driven pricing. So, talk to me, people. What does that tell you? What does that indicate to you? Thanks, Madge. This line here, reflecting position tweaking and technical rebalancing rather than news-driven repricing.
Is it just positioning to get a price before it does what it wants to do?
Yeah, exactly. And when you look at this, who can tell me what we had on Thursday, news-wise, without looking? What do we always have on a Thursday? Every Thursday, every week on dollar.
CPI or
No.
Fed speech?
No. Every Thursday, red folder news. Anyone know? Unemployment, bang on. Does anyone know what those unemployment numbers were? Or were they good or bad?
They were good, weren't they?
They were good unemployment numbers. Right, now, again, without looking, what did we have on Friday? CPI. What is CPI, Sof? Inflation, that's it. We've obviously had the government shutdown. CPI numbers for the first time we've had the numbers in a couple of months. So it was an important news event. Let's go to our economic calendar.
Am I right in saying that inflation dropped, so a rate cut was more likely? Am I correct in saying that?
Let's go back to...
What's this program you're using?
It's called Market AI. It's a company that I've been playing around with recently that gives you, basically gathers together all of the news, gives you catalysts and information that could change market sentiment. I'm just trying to find this PCE details. 2 seconds. Let's just go through it again raw. I'm still getting familiar with this thing. So we had core pricing index, which was as per the numbers. Consumer sentiment was greater. Personal income was greater. So all of these numbers were either on target or they were greater than the forecast. So again, a bullish play. Now, FX Street's really good to understand what is happening ultimately. Let's see if we can find some news from Friday, because it's really important. So, cool. We want PCE. Here you go. Cool. Right. So, gold raises earlier gains as a firmer US dollar caps upside. Dovish Fed expectations. So that's the 25 points that we're expecting next week. And persistent geopolitical tensions continue to offer support. So let's go through here. So the US dollar bounced off earlier lows after the delayed US personal consumption expenditure report for September offered no surprises. Core PCE, Fed's preferred gauge, rose 0.2 month on month, matching expectations, whilst the annual rate eased from 2.8 to 2.9. Headline PCE steady at 0.3, matching the forecast remaining unchanged previous month. On a yearly basis, the index came in at 2.8. The broadly steady inflation readings did little to shift the policy outlook, so that's the Fed cuts next week we're expecting, with markets still largely convinced that the Fed will lower rates at next week's monetary policy meeting. So that's that number, by the way, at the moment is at 87%. We've got an 87% chance of a rate cut. So who can digest that for me and explain to me why? What have I just read out to you guys there? What does that mean?
Well, if then the dollar's going to drop.
You're breaking up.
Can you hear me now?
Just.
If we have a rate cut, the dollar drops, right?
So rate cuts aren't good. This bit here, so the Friday news, just kind of digest that for me. Explain to me what we've just gone through there. So inflation figures were stable and on the edge of slightly better than expected.
So you've got some slight positive sentiments coming to the dollar, probably
exactly
not enough to shift an overall trend.
Exactly that. That's exactly what I was looking for. So remember, guys, right? Fundamental analysis is really important for direction. We want to understand why the market moves. And whether you like it or not, the market doesn't move off purely technicals. There's a fundamental backing pretty much to every move in the marketplace. If you have a bullish day, something's caused that. It's not just liquidity's being grabbed and then the market's gone higher. There has to be a reason for the market to go higher. So,
does that mean that monetary meeting is going to be important next week? Or?
No, probably not, unless they... And this is where people get stuck with FOMC. We've known now for nearly 2 weeks that the chance of a 25-point base point cut is really high. So if the Fed cuts rates...
You don't notice it, really.
Say again? He didn't mean to speak, did he? But he was bang on. You won't really notice it. That's why I was a bit confused. You won't really notice the rate cut because if it comes in at 25 points, then it's what's expected. All right. So if the Fed says no rate cuts or a 50-point cut, then that's where you're going to have a massive impact. The interest rates are really important. So inflation's steady and on the verge of being slightly positive. What does that mean, Madge? What does that mean for the economy? If inflation's going up, Is that good? Is that bad?
Well, I suppose it's a little bit there's a little bit of optimism there that might not actually cut the rates because of inflation.
So the dollar moves on investor expectation and risk. So when we're looking at risk, the reason why the dollar's been dropping since 21st November is because poor US economics, and now the big drop, which started from last week, was after we had that, can't remember what it was, but last Tuesday we had some news event, I've forgotten what it is now, and basically 3 Fed officials came out and said, we're definitely going to cut rates. Basically, we have to cut rates. If the Fed is cutting interest rates, it's because they're trying to incentivize spending, and that's what's caused this market to drop. If inflation comes out slightly good, which is what these results were, slightly good, then it puts a bit of risk back into the market, because this move here from here to here was a risk-off market. Investors were going, the Fed are cutting rates. That means their economy is struggling. I don't want my money in US dollar assets. I'm going to take it out of US dollar assets and I'm going to put it in strong assets like gold. Hence why the dollar dropped on the 2nd of December and gold climbed on the 2nd of December. That's exactly what happened. Okay, so you see every single move, especially a big swing, has a fundamental backing. And it's really, really important to understand that as well as the technicals, okay? Now, we had this positive news. So we had positive employment on Thursday and we had positive inflation. What it does is investors go, okay, getting a bit better. Inflation's getting a bit better. Maybe the Fed don't need to cut rates. However, no Fed official has come out and said anything along those lines, which is why the market moved like it did the last couple of days. Now, a smart trader, a risky trader, could have taken these longs on these news events. 2.8 there, 2.1 there, okay? But not how we trade. We don't trade the fundamentals alone. And remember, this is just a positioning move. It's being confirmed both in the fundamentals, the macro, and our clever little tool here. It's a positioning move, tweaking and technical rebalancing rather than news-driven repricing. This isn't the market saying to us, the dollar's all good now, guys, don't worry about it, fuck loads of money in it. There's 2 things that happened last week. Big investors who had been selling from here, all of these big pullbacks, and this is where the technicals come in, okay? So the thing I got wrong with fundamentals quite a lot of the time is I go for this. I go, right, fundamentals, we've had positive news, so let's buy the dollar. We've had negative news, so let's sell the dollar. And that doesn't quite work like that. The news and the fundamentals give you a lean. If bad news comes out, that leans towards the dollar's overall picture, which we know right now is quite weak. If these news results on Friday and Thursday had been bad, what do you think would have happened? Yeah, it would fucking plummeted because it's already weak. It's a bit like a set of scales, right? And that set of scales can't get to the bottom at any point. It can just keep going and go, okay? The weight you put on the sell side, the further it's going to drop, and it's going to keep dropping. And the only time it's going to stop dropping is where weight gets put on the buy side, and that then balances out those scales and slows things down. That's happened the opposite way. The market was heavily bearish, and then Thursday and Friday, that market has slowed the bearish or the dovish, as they call them fundamentals, the dovish low. Now, the way that your fundamentals will help you is your fundamentals will give you a lean. I call it a lean, okay, which is a lean towards a particular direction. What you then have to do is you have to align your technicals with it. The technicals, when they align, that's where you find the really good trades, like the trades we took last week and the week before, okay, these good bearish moves, okay, that's we caught some fantastic positions at the marketplace. And this week, Tuesday was our move of the week. Tuesday was fucking beautiful. I wasn't in it this week. I was in it last week. I wasn't in this one this week. Beautiful sell out of Tuesday. Now, why? Okay, here's the question. So we've had some positive news. Why did the dollar reverse from here? Okay, the answer is in the technicals. Why did it reverse from that level?
Is it because we're below external?
Exactly that. So we are now below 2 significant liquidity points. Weekly low here from November. Weekly low here from earlier in November. All right. What's happened is the investors who sold here and what do you think they would have done when they took out those 2 liquidity points?
Take profit.
Okay. When are they going to start taking that profit off? Think about your weekly cycle.
Thursday, Friday.
You're below liquidity on Thursday. You've made shitloads of cash on the way down. You come at the end of the week, Christmas is happening, because remember this, so much of this technical and stuff, like where reverse is from and that sort of stuff, is driven by humans, right? It's human psychology. So most of the market is human psychology still. You're coming towards the end of the week, you've had a busy week, you've made a little bit of money on Tuesday, your positions of, your targets here. Yeah, you've got another target down here at 98.6, but you're in a good position. You've made a load of money that's closing these positions off. It's Thursday. We've got news on Thursday lunchtime. Oh, okay, shit. Thursday lunchtime news. Unemployment figures come out. Okay, so the market rallies a little bit. We spoke about this on Thursday. What did it do? It did exactly what it can do. It grabbed false break liquidity or first break liquidity, set a trap. What happened? The trap was tested. Unfortunately for us guys, the trap move was at 2 in the morning. And that was just poor location and poor time. That's going to happen all the time. You're going to see that all the time. Perfect setup plays out, but you can't take it because you're fast asleep and it's not in your key trading windows. Okay? Price that came down, tagged that trap. Okay? I wanted a sell from here. I was looking for sells from here. I took a sell on EU, expecting this to go down further. The market wasn't having it. Perfectly valid trade. I'm happy with that trade all day long. Took out liquidity, false break trap up to this trap up here. Okay, I wait for, because it's a Friday, I wait for a very clear first break. Okay, retest to be a little bit more risk on Friday when I've got clear direction, and I had clear direction. What can I say to kind of trade if I was to be hypercritical of myself? Well, this move had already tagged and rejected the trap, and this move wasn't strong enough to create a new structure. The only thing that could have made this better is if I had structure here and a new close above this liquidity. That would have given me clear bullish structure to trade in line with. Will I still take that trade? Yeah, I probably would. I'm happy to take the risk, and if it had played out, I'd have been very, it would have made sense because my market and my fundamentals is still bullish on EU because it's still bearish on the dollar. Okay? Unfortunate that that move happened overnight, but exactly as we planned, positioning move, grab of liquidity, set up, sell into the trap, happened at 8 o'clock on a Friday morning. We'd all been sitting here now having a very different conversation. We'd have hit the trap, we'd have taken off profit, and we'd be like, hey, the strategy worked out. And the strategy did work out. Did exactly what it does. Told you, 90% of traps are always tested, right? That is one of those 90%. Okay? However, was just struggling for a few reasons. We were below external liquidity, okay, in poor value. And again, Thursday, Friday, we can take trades like this. I wouldn't take a trade like this on any other day other than Thursday and Friday because those are our continuation days. But this was poor value. For a seller, that's poor value. If you were a seller, an investor, you'd want price to come up to somewhere like this, right? You'd want to be in here. You'd want to be in premium pricing where you can make loads more money off your sells. So you can see every single move in the marketplace, meaning. Now, the news came out good, okay? So why didn't price rally? Why didn't price do that? Why did it pull back? You can see here on the 2-hour chart, it didn't even create a new structure, really. Why didn't price do that and come up to that daily level? Or maybe come up to this level up here?
Not enough buyers to take control. Friday.
Yeah, so literally the case. Not enough buyers to take control. Yeah, absolutely. Low you in the marketplace. Fundamentally, though, why didn't it do that?
This is weak. No.
Still not enough confidence in the dollar.
Yeah, exactly. Unemployment, which comes out every single week. Okay, it's unemployment. Okay, so economics. I'll show you. Fuck off, mate. States. Okay, unemployment. We look at the last 3 years. Okay, employment. This is. Unemployment rate has increased to 4.4% in September from 4.3% in August, exceeding market expectations of 4.3% and marking the highest level since October 2021. Okay, so just perhaps some better than normal unemployment claims doesn't discredit the fact that since 2021, unemployment numbers in the US are climbing and climbing and climbing. So you can see there's a much bigger picture going on. And a lot of people look too kind of matter. They look too much like cause and fact. They look at unemployment. They go, well, unemployment's good, so the dollar's going to go up. Well, yeah, it is. Think about it in the context of the overall market, right? Let's look at inflation. Okay, slight bit whatever. Down since 2023. We obviously had big inflation numbers after COVID because everyone started spending money again. but it's kind of not all that much. Look, inflation rate here. Okay. Again, it's not really, yeah, it's going up, but it's like going up really slowly. So, and obviously a delayed forecast as well, because this is the September results we've had because of the government shutdown, right? So it doesn't discredit the fact that the economy, if we look at GDP growth rate, which is a really good marker on how well an economy is doing, okay? It's a good 5-year view, 3-year view here. It's not, the economy isn't growing. It's blur, right? A bit shit. And then we go and look at interest rates. Okay, and this is the big one. Well, look at those interest rates. They are dropping and dropping. It's the sign of a struggling economy. So, with fundamentals, try not to look too kind of cause enough to be like, well, we've had some good news on Thursday, we've had some good news on Friday, so the market's gonna, the rally. Well, it might do a little bit like it's done here, but it's not gonna change the climate, which is this dollar is still weak. And the most important thing, the big one, is always interest rates. That's always going to control the market. So look, I know guys come here for kind of, hopefully you can see how important it is to understand why the markets operate, because some of you will be looking at this yesterday and Thursday and scratching your heads being like, I don't understand what's going on. Does that help? Does that give you a clearer picture as to we were struggling? The technicals is still right. We were below external liquidity, therefore we probably will seek out some internal liquidity. But the fundamentals are still telling us that the dollar is bearish, which is why even though we had positive news for the dollar was struggling to climb. So, what is the play next week, people?
Wait until see what price does.
Yeah, that's not a bad idea, to be fair. That's not a bad idea. But just overall, let's say the Fed do come out and they cut 25 points, so it is as expected. What is the play next week?
Wait for price to retrace to internal liquidity.
Yeah, I think so. I think we wait till one of these levels is tagged, which might give us some buy opportunities. Look, it might take a week for that to play out, right? And therefore we can take a counter momentum play. Happy with that all day long. But it might also climb really, really quickly, and the Fed cuts rates and then it drops and drops. It's what the Fed speech is, so make sure you have a look at the next day. Go in the summary of Powell's speech, because what Powell says in that speech at 7:30 is really, really important to investors' outlook. So if he says, similar to what the Kiwis did the other day, where he goes, we're going to cut 25 points, but with this, we're going to, be able to boost the economy, we're going to, create money, so X, Y, Z. If he says a really positive outlook for the dollar, you might find the dollar rallies off the back of what he says. So Wednesday's a really, really important day, okay? So let's just be cautious out there these next couple of days. You might just have weak price action Monday, Tuesday. The market will probably just wait, especially because it's Christmas and low volume anyway. The market's probably going to wait until Wednesday for a lot of information. Do remember as well, guys, okay, we've got next week as a full trading week. We've got the 15th, but I think the 15th onwards, the 15th is the Monday, and I think that end of the week is going to get really, really slow, I'm honest. So the way I look at my week for the next couple of weeks is I'll probably be trading next week like normal, all right, especially Thursday and Friday after the Fed announcement. I don't know if I'll trade again this year after that, honestly. I'm going to have a look at the 17th, 18th, 19th, which is my Wednesday, Thursday, Friday. But if I don't see something really sexy, I'm just going to, do you know what? I'm just be like, whatever. There's other things I can be working on. Okay? Christmas week onwards. Put an announcement up yesterday. Okay? I'll still be around. Okay? But let's have a week off, guys. Proper week off. Week off family, week off trading, week off Discord. You're not going to be able to trade. If you trade in that week, you are going to die. Not obviously literally die, but you're going to blow your accounts up, okay? It is, promise you, it is going to happen, okay? Do not that week. Just stay away from the markets and analyze if you need to. But most of you have been through a lot of education, okay? Are we doing any calls that week? I'll be catching up with everyone in the week before, so week commencing the 15th. Have a good week off, guys, all right? Enjoy some time with your family. Take a week off. We'll be back on calls and stuff from the 29th onwards. Okay, so it's Christmas, we'll be off, and then we'll be back on calls from the 29th onwards. And then I'd probably suggest the 5th of January, we start looking at the markets again with potential trades on 7th, 8th, and 9th, which is Wednesday, Thursday, Friday. But I wouldn't say the market's probably going to get going properly until the 19th of January onwards. Lots of traders, by the way, take off December and January completely. They take 2 months off. Lots of professional traders don't trade those months at all. So I suppose what I'm trying to say is just be careful. Okay, the market is going to be difficult over these next few weeks, and just try not to force anything. You're probably not going to be passing your prop firm challenges. You're probably not going to get any particularly big payouts, but most importantly, let's make sure we protect that capital. Okay. So yeah, slightly different ending this week, been helpful and beneficial for you all to give you a bit more understanding of how we can use the fundamentals. Always keep an eye on the news. FX Street's your friend. The market tool's really good as well. I put some details in the group with that the other day. The discount code is now live as well. If anyone wants to, that's there. Keep an eye on the Forex calendar and have a look at, you know, the economy as I'll keep you updated with the dollar, because I mainly trade the dollar, obviously, as you know. But yeah, just be at these next couple of weeks, guys. I don't want to see anyone blowing their accounts and that sort of stuff in the run up to Christmas, because it's a really shit Christmas present, isn't it? Any questions at all?
Chris, I would like to say that on Wednesday you wrote forgot to do the draw.
Yeah, you're right. I think, to be pretty black and white, let's have a look. Pretty sure Lou has won it, if I'm honest. Go to your leaderboard, let's have a look. Yeah. I mean, she beats pretty impressive, 16,000 points, okay? So we'll do, in January, I've got a new competition. So well done, Lou. Is Lou here? Are you here, Lou? No, she's not. I'm going to do another in January. I'm going to do an accountability competition, which is, we've done this before. I want to see people do their morning analysis and their end of day routines and their journaling every single day. So I'll get that set up in the new year for us all to go. Might do it over maybe a couple of months or something like that, just to get the new year really started. Okay, so well done to Lou if you're watching this back. Congratulations, and I'll do a cut in the new year as well for anybody, for anyone who wants to get involved. All right, thank you all. I appreciate the reminder. Guys, I'm going to jump off now. I'm very late for the one-to-one call. I'm going to jump on with the one-to-one, guys. And yeah, I'll see you all, well, Monday. Cheers.